Time for the market segment. A lot of USDA reports to look into.
That there are. Livestock the focus, and we'll look into them. But first, the numbers. What were last week's biggest gains and losses? And then several USDA reports on our livestock and dairy supplies. And finally, we sit down with MSU livestock economist Josh Maples to talk about what these reports have to tell us. So, markets closed last Friday trending down, row crops all dropping while livestock split. Let's take a look. Last week's biggest gain, soybean oil up nearly 1/4 cent, a near 0.5% increase from the previous week. Last week's biggest loss, lumber, again down $45. That's a 9% decrease from the previous week. So, several USDA reports dropped recently, giving us an idea of what our current livestock situation looks like. The biggest takeaway is signs of recovery, but we'll get into details in a bit. Here's what they said.
In the latest cattle on feed report, cattle and calves on feed totaled about 11.6 million head, slightly below June last year, which was about 11,590 million head. Placements in feedlots during May totaled about 2.5 million head, 4% above last year. Marketings of fed cattle during May totaled 1.96 million head, slightly above last year. Other disappearance totaled 62,000 head during May, which is 16% lower than last year. The livestock slaughter report showed U.S. commercial red meat production totaling about 4.62 billion pounds in May, up 1% from last year. Beef production was 2.33 billion pounds, up 1% from last year as well. Veal production totaled 3.5 million pounds, 16% down from May last year. Calf slaughter also down by 27%. Pork production totaled 2.28 billion pounds, slightly up from last year. Slaughter down 27%. Lamb and mutton production totaled 11.5 million pounds, also up slightly from May last year. Sheep slaughter slightly up as well. In the broiler hatchery report, U.S. hatcheries set 246 million eggs in incubators during the week ending June 15th, up 1% from last year. Average hatchability was 79.1%. In the same time, U.S. broiler growers placed 190 million chicks for meat production, up 1% from last year. Cumulative placements were 4.52 billion, also up 1%. U.S. milk production for the month of May totaled 18.9 billion pounds, down 0.7% from last year. Production per cow averaged a little over 2,000 pounds, 3 pounds below May last year. Number of milk cows was 8.89 million head, 52,000 less than last year.
So now we have the context. What did the reports really say? I spoke with MSU Extension livestock economist Josh Maples to get his thoughts on, in particular, the cattle on feed report.
So this cattle on feed report was actually pretty surprising. Going into the report, there wasn't a lot of expectations for big increases. I think the largest analyst expectations were for about a 2% increase, and that was on the high end. Most of them were lower than that. But the report actually came in over 4% higher than a year ago in terms of placements of cattle into feedlots. So this was a big surprise, although it didn't really have a negative impact on prices that you might typically expect whenever you see larger placements. So overall, big headline surprising reaction is placements were a lot higher than were expected last month. But other things continue to have more impact on what future prices are doing right now. So placements are the number of cattle that get placed into feedlots during a period of time. So the cattle on feed report that we talk about, it comes out each month, and we're talking about the placements or the number of cattle that go into feedlots. And for this particular report, it is only tracking feedlots that have 1,000 or more head capacity. So it's not every feedlot, it's just the feedlots that have at least that many heads. So when we talk about placements being up, that means more cattle went into feedlots during May than did last year. And so we kind of compare year over year because there's those seasonal patterns that are so important. I don't necessarily think this is a big telling sign about what the culling part of the herd is doing. So if we look at placements for the year, we're down about 2.5% through the first 5 months of 2024 compared to where we were a year ago. The biggest reason for that is just simply we had fewer calves born last year than we did the previous year. So even though we saw larger totals in May than we did in 2023, for the year so far in 2024, we're still running about 2.5% below. And an interesting piece of that as well is we've seen imports of feeder cattle have actually been higher this year. So they've been up this year. Stronger prices in the U.S. have pulled some feeder cattle, especially from Mexico and Canada, into our feedlots. And so if you take out the imports, the number of feeder cattle in the U.S. that have been placed into feedlots is actually down over 3% compared to where we were a year ago. So those tighter supplies are continuing to play out, even though we did have this 1 month where we saw placements higher than a year ago.
And that's it for a deeper look into the markets. Drought's still an issue while our livestock is in recovery. Looks like it's going to be a hot summer.